Are American companies under attack in Europe? The EU ordering Apple to pay up to $14.5 billion in back taxes over claims that it benefited from illegal tax breaks in Ireland. Now, Tim Cook from Apple and the Irish government have quickly defended the tax arrangement, both have, and the U.S. Treasury has hammered back, saying that the EU is unfairly targeting American companies. The White House just weighing in on this, with Josh Earnest saying that they're monitoring the case, and if Europeans have concerns over taxation, they should work jointly with us. Let's bring Dan Mitchell in from Cato, tax policy expert. And is there something to this, Dan, that U.S. companies are being targeted overseas?
It's not just Apple. You have the European Commission going after Amazon, going after McDonald's. They've already gone after Starbucks and Google. We know the Europeans are very pro-tax, but what's really amazing about this story is that the European Commission, which is the EU bureaucracy in Brussels, is not only going after Ireland for the ostensible sin of having low tax rates, but they're doing it targeting an American company over very strong objections from the U.S. Treasury Department, and that's unusual, because normally these governments work together. They sort of conspire like a pack of jackals to take money equally from a company.
Well, it is odd to me also that you see the way this is being reported, and explain to me how you see it, but you have $14.5 billion, that's U.S. dollars, that is supposedly owed to the Irish government, right? And the Irish government, I assume, because they love being known as a low-tax country, they're basically saying, hey, we don't want this money. Most places would say, give us our money, we deserve it, and they're not saying that.
That's what's really amazing. For once in our lives, we're seeing a government saying, no, 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 no. You keep the money in the private sector. You'll use it smarter and better than we will.
Well, that's about reputation, don't you think? I mean, because Ireland, the 12% corporate tax rate, even when things were horrible there, they never budged on that. They love being known for that. They think it attracts business. And they're right, aren't they?
Well, Ireland used to be the sick man of Europe. You go back to the 1980s, they were almost third world status in terms of their poverty. They went with a policy of low taxes, at least on companies. They also brought down the burden of government spending. And by European standards, they're a success story. So think about it this way. The European Commission has high-tax welfare states like Greece that are collapsing. Does the European Commission try to force them to lower the burden of government spending? No. They put all their energy into trying to penalize Ireland for the sin of low taxes. Here's what I want to happen. The European Commission went after Ireland more than a decade ago because they used to have a 30% tax rate for domestic companies and a 10% tax rate for multinationals. Ireland basically responded by saying, okay, we'll have 12.5% for everyone. Now the European Commission is going after them again for saying, oh, your 12.5% rate isn't maybe applying to some of this income for Apple. Ireland should say, fine, we'll do 5% for everyone. That would really punish the European Commission bureaucrats for trying to penalize low taxes.
That is interesting. Good take on all this, Dan, as usual. We appreciate you coming on with us. Dan Mitchell there. And while we're